Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Harmony One. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now, let's jump straight into the TA. Taking a look at the daily chart on Harmony One against USDT, we still have the same Fibonacci retracement set up on the chart with the swing high printed in November, or rather October 2021, and with the swing low printed in June of 2021. We retraced below the 1.618 target here at 0.01313, which was our technical target after losing the swing low we printed in June. And right now, what we've done here in February is we retraced to the 1.272. If I remove the price tags here because they're going to be a bit distracting. So what we did is we ran into this resistance level here at 0.02695 cents. And we've actually done that twice. So you had two opportunities to take some profits, and you could have already bought back at the 55 EMA on the daily, or you could have been waiting for the 1.414 fib level retest at 2 cents, or you could have been waiting until we come back down to this purple support block, which we have successfully done right now. And this is where you can start dollar cost averaging anywhere between 0.01703 cents down to 0.01580 cents. And since this swing low that we printed back in February, at the start of February, as you can see, we have already pulled back down approximately 44%, which is crazy. And after a pullback like this, you can start dollar cost averaging. I'm not saying that we're not going to be going lower from here. It is possible we're going to be going lower from here. But if your average buy-in price across all these, across this year is going to be somewhere around, let's say 2 cents even. Let's say around 2 cents. And the all-time high for Harmony One is sitting at 41 cents. So that's a 20x from that average buy-in. And no one's saying that if we go lower, you can't buy more. You can even triple your position if you drop below a cent. No one's saying you can't do that, and your average buying price is going to drastically go down. So I'm just saying that, zoom out, don't focus in on these little prices, because those little bits and pieces of greed are really going to be detrimental. Because if you don't want to be buying, for example, here, and let's say Tesla starts accepting Bitcoin tomorrow, we start the pump and we're out of the woods, and you're still here with your cash thinking that, Harmony One is going to go below 1 cent. Now, obviously, that's not going to happen right now. That's not going to happen tomorrow. That was just a hypothetical to show you the potential scenario you could find yourself in, because truthfully, you don't know where the bottom is going to be at. So what I'm doing is I'm buying whenever I can. I buy whenever I see a strong dip, and I try to dollar cost average to get a strong position. And once we start moving out of the bear market into the next halving, into the next bull market, you can imagine the gains that are going to be coming, right? And you can sell at 30 cents, you can sell at 20 cents, you can even sell at 5 cents if you want to. You can wait until we get to the bull market and we start seeing price discovery for Harmony One, for example, from the low that we printed in January this year to the swing high in January 2022. The 1.414 here is sitting at $1.75. That's a 10,000% move to the upside. The 1.272, which is the minimal target, is sitting at $1.04. That's a 6,000% move to the upside. So as you can see, that is a lot of gains to be made there. So you just have to be patient. And once you're selling at $1, it really doesn't matter if your average buy-in price is at 2 cents exactly, or if it's at 0.018237. It's not going to be important, because you would have made so much money at that point that it's practically it just doesn't matter. What's important is that you're buying here at these lows. Okay, and I'm not saying that you have to be buying at these moves to the upside. Actually, the opposite. I was telling you guys that I'm waiting. I'm not buying in this impulsive move. I don't want to be doing that. I don't want to be buying when a project just made 3x in a month or something. I don't want to be doing that. Once we start getting these pullbacks, that's when you can start dollar cost averaging. That's the way I do it. Obviously, you have your own strategy. I'm just sharing the way I do it. Taking a look at the daily RSI, we're already back in the golden support block. I've been talking about this for multiple months for Harmony One, and if we drop even lower on the 14th and 15th, if the CPI and the PPI data is going to be very negative, we could drop down here to the RSI of 24 roughly. And on the 22nd of March, if we have the interest rates risen by hiked by another 50 basis points, that is going to be very damaging to the US economy, and consequently the stock market is going to collapse, and the crypto market will collapse as well. I don't know how low we're going to go. Probably not below the 15,000 and a half price that we had last December, or last November, I think it was. Yeah, we bottomed out in November on Bitcoin. So I don't think we're going to be going below that low, but the pullback is going to be strong, possibly $18,000, $19,000 to be retested after that, because this is going to be huge, because the Fed was starting to pivot. So the pivot actually comes in 3 steps. First, you start changing the interest rates, or you start lowering them. So from not lowering, but you start increasing them at a lower rate. So from 0.5, you went down to 0.25. From there, you stop increasing them, which is the second step in the pivot. And the third pivot is when you actually start decreasing them, or cutting the interest rate, so to speak. And that is what investors are expecting in 2024. Now, if we're going to be switching from 25 basis points to 50 basis points once again, that is a very hawkish move, and that is going to drive investors away probably. And it's good for us because we're going to be able to buy in at these lower prices. Now, let's switch over to the Binance weekly chart. And before we continue with the video, guys, I quickly want to give a shout out to everyone who has joined my Patreon. Thank you very much. And if you want to become a part of the Patreon and, get access to a lot of exclusive content, such as podcast episodes for patrons only, my trade alerts, my entire portfolio. I share everything that I buy and everything that I sell. If you want to leave some requests, we can take a look at your projects on Patreon. So there's a lot of cool stuff going on there. I try to do daily updates and daily posts in there. So if you want to try it out for free, you can do that as well. There's a 7-day free trial, so you can do that and let me know what you think. Let's get on with the video. Taking a look at Binance's weekly chart for Harmony One, as you can see, we did not retrace to 3 cents here, and we're already pulling back down. Some people were commenting that we're going to be breaking 3 cents very soon, which was possible, obviously, but I was not overly bullish, and people were saying, well, Hazeeq, you're being too bearish. We're probably going to be moving upwards from here, and some people were even expecting the bull market to arrive. Well, my friend, when you look at what's going on with inflation, it's just not logical to assume that the bear market is going to be coming. What was logical to assume in this situation was that this was simply a lower high, which I was talking about. We did not even retrace to our technical target here from the falling wedge, right? We had to retrace to 3 cents, which was our technical target. We didn't even manage to do that, and now we're pulling back down. So we're coming back down to this green support block, as you can see, which is set up from 0.01705 down to 0.01295. In this area, I think we could start dollar cost averaging. That is totally fine. Great buying area. If we manage to bottom out here and continue moving up from there, that's great, because that is going to be a lower or a higher low, which we need for a local uptrend. But with the next move to the upside, with the next leg up, we need to be breaking that local high. Otherwise, we're just, continuing down, because if you're, printing lower lows and lower highs, that's just a downtrend, right? So you have to understand that we've broken above this resistance of the falling wedge. What could happen as well is that we dump all the way down to retest the previous resistance as support, and then we continue to the upside. That has also a place to happen, but I don't think that is going to happen unless we move from 25 basis points to 50 basis points, as I explained earlier. So yeah, paying attention to what the Fed does is really is really important because you can base your financial decisions and you can understand when you want to be buying in, when you want to save up some cash, or even, get a second job maybe and just work extra hard to, create a strong portfolio during the bear market so that this next bull market is going to be your, sort of your time where you unlock the door to financial freedom and you don't have to be working that 9 to 5 job. So the weekly RSI here, as you can see, we're coming back down below the green resistance block. And what you can expect is you can just target the previous swing high. Like I always say, you can target the swing highs, target the swing lows, because that's where the liquidity is going to be at. So this over here on the weekly RSI is going to be a level that we could be targeting, which is at 35.5 on the RSI. So take a look at that level. If you see the RSI dump down to there, I get the brush, if we come all the way down there, that's going to be a nice buying opportunity. We potentially could see a pump all the way there, all the way back to the green resistance block, and a move to the downside afterward, essentially creating another lower high. So this is all speculation, obviously, but what I'm saying is if we pull back, that's when you want to be buying. If we move to the upside, that's when you want to be taking profits. But obviously, if you're holding for the long term, you want to be waiting until the bull market arrives. So that is pretty much everything I have here for Harmony 1 on the weekly chart. If I missed out anything important, let me know down below in the comments section. Feel free to check out my Patreon, Twitter, Telegram chat, and Discord. All the links are down below. If you have any questions, you want to reach out to me, feel free to do so via Telegram. Thank you all for watching, and I'm going to catch you in the next update. Goodbye.